Earlier today, I did speak with Stan Druckenmiller, who is fired up about the Fed ahead of tomorrow's decision. Take a listen.
I think the 2% inflation target needs to go. If I was running the Fed, thank God to the world I'm not running the Fed, it would probably not be in my top 10 criteria. The 2% inflation target has sort of become a religion initiated by the professors, and it's this target. There's an interesting story on the front page of the Wall Street Journal today, how Amazon is making the Fed's job more complicated. This belief that 2% is appropriate for all seasons and all times, to me, is pretty absurd. You take the last great innovation period, which is the late 1800s. We had deflation for 10 or 15 years, accompanied by very rapid real growth. In the 50s, I think inflation was 1%, maybe a little lower for a good part of that decade. Fed funds were 4%. We had rapid growth. There was no crisis.
So what you're saying now is that if inflation's running, let's call it 1%, that should be considered normal and fine, and they could still have interest rates up at even 4%?
What I'm really saying, if you took the Taylor rule, and I'm not a fan of rigidity, a normal interest rate, given our economic circumstances, would be 4%, interestingly. We're at 1%. In Europe, it would be 2%. They're at -40%. In Sweden, it would be 3.75%. They're at -50%. That doesn't even count the bond buying we're talking.
Yep.
But this is all in the name of this 2% inflation target. And
if they're keeping rates in this country, barely above zero, and other countries below zero, what do you think the consequences of all that is?
Well, the consequences are huge because we've distorted market signals and we're causing all sorts of what I would call misallocation of resources.
Like Bitcoin, or is that unrelated?
No, it's not unrelated at all. Bitcoin, art, wine, equities, credit, you name it, everything is one way up, and there are huge distortions taking place. And it's all in the name of this 2% inflation target. And when you get a misallocation of resources, it really hinders growth over the longer term. Let me give you an example. Last week, there was a company called Steinhoff.
That's the company that's the parent of mattress firm in the U.S. now.
Yeah, this is a South African firm. I was lucky enough to be short the stock because someone was kind enough to explain to me that these guys might be crooks. There was fraud at best when you look what was going on. It's a huge roll-up. And they buy this mattress company in the U.S. for 100% over where it was trading. They're borrowing money, big roll-up, big credit. And guess why they're able to issue all this debt? Because the ECB is buying it. Of a company that half the street knew was a fraud and is going to go bankrupt. Now, Mario Draghi would tell you, no problem. We're making money overall in our portfolio. The fact that we lost 150, 160 million on these bonds, it comes out in the wash. The point isn't whether the ECB is making money. The point is they are keeping crooks and zombie companies alive. This is exactly what Japan did for 20 years. It hinders long-term growth. Companies like this should not be walking around borrowing money. That's kind of where we are today. You see what's going on in Bitcoin.
Do you own any cryptocurrencies?
I don't own any. Obviously, as a trader, I should have, but I only trade what I know. What I do know is it takes the same amount of energy to do one Bitcoin transaction that it takes to power 9 homes in the U.S. By 2019, it'll take up half the energy in the entire United States to run the Bitcoin network.
Sounds like the utility companies are a buy.
Well, I find it interesting that most of the people in Bitcoin are climate people. They're West Coast people. I don't quite get the connection. We've got this rogue currency that we're all going to support that is destroying the climate in some extent, but whatever.
So you're not going to take a position on whether Bitcoin is going to go up to 100,000 or 1 million or whatever the... I mean, if we're talking about bubbles, it must look to you like some of the greatest we've ever experienced.
I don't know whether it's the greatest we've ever experienced. Look, Bitcoin is like anything else. It's worth what people are willing to pay for it. And right now, people are willing to pay, I haven't looked in the last 5 minutes, so it could have varied 10, but let's say they're willing to pay $17,000. That's what it's worth. The tulips were worth when people were paying that for them. Gold is what it's worth. What I do know about Bitcoin is the concept that it could ever be a medium of exchange has been eliminated because you can't do transactions, particularly retail transactions, with something with this kind of volatility. But if people think Bitcoin is worth 17,000, that's what it's worth today.
Last thing on this before we move on, there are people who want to hold Bitcoin because they're as critical of the Fed and other central banks as you are. So if they agree with your philosophy that the central banks are screwing this up, then what would be a better way to express that than holding something like Bitcoin?
That's an excellent question. I think at some point figure out when this is going to end and then either get out or go short. Because, by the way, when this ends, and it will, I'm talking about this monetary radicalism period we're in, Bitcoin will probably go down with the rest of the stuff.
How has the year been for you?
I would have to say it's probably the worst year I've had relative to the set of opportunities out there I can ever recall. I mean, for me, 1997 was close, but
that was an Asian financial crisis.
Well, that was a pretty good opportunity. I have done very well in stocks. I've really mistraded macro. It's going to be, if it was up to macro, I'd have my first down year, but stocks have bailed me out, so
wow.
Barring a miracle, that's not going to happen. But
you're not up 30%.
I'm not up anywhere near 30%. I'm not up double digits. You know, I'm having, again, relative to the opportunity set, a terrible year. It's going to be my first, barring a miracle, it's going to be my first down year in currencies ever.
I've pointed out repeatedly the fact that the U.S. dollar is so weak. Would that be one example, or are we talking about other things?
No, it's just me overtrading and being cold at the wrong time. And since it's been my bread and butter for years, I'd say over-allocating exposure there relative to equities. Somebody on your network said a week ago, all you had to do this year was roll out of bed, and you're going to be up 20 or 30%. Apparently, I got out of the wrong side of bed.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.